Well, folks, this is an absolutely massive week for your man right here, okay? We're going to get into, in this video, two things. We're going to get into what's going on this week. I have, let's just call it a lot on the line this week, okay? And I mean a lot on the line. So we're going to get into what's going on this week. We're also going to get into which stocks I think will likely beat earnings this week and some interesting opportunities out there, okay? Before we get into all that, I just want to let you guys know I was at the Win in the Encore last night. And here's what I told the private stock group members. I messaged this at like 12:34 a.m. I said, I was at the Win in Encore tonight. Surprisingly super busy. November through February in Vegas is usually a bit of a slower time. So to see the casino hopping like that was quite interesting. Almost everything was a $50 minimum per hand. I was in the high limit rooms at the Win and Encore, and both were busy. For the high limit rooms, they both were very, very busy. Baccarat minimums were $1,000 and up a hand. Many Asian players had, oh my gosh, the stacks of these chips were unbelievable. That's all I have to say. I mean, there's a lot of big money at play there. So I was impressed. And by the way, I was not the one that was playing in the high limit rooms. I'm too cheap for that. But anyways, it was very encouraging to see. I mean, in January to see the Win hopping like that, the Encore hopping like that, was very encouraging. I mean, I could have thought it was a summer night, when everybody comes to Vegas because they want to go to the pools and all that good stuff. And man. So overall, I was pleased, very, very pleased overall. Alrighty, guys. Before we get into all this, need two things from you: smash the like button, smash the subscribe button. That's it. Like, subscribe. Not that hard, even for the people that think you're too good to do it. Please do it. It helps the channel out. That's all I ask, man. I recorded you guys these videos for free. Come on, man. Okay. Alrighty, guys. So first up here, Monday. SoFi's reporting before the bell, and then Whirlpool's after the bell on Monday. Whirlpool, I think, is an important one to keep an eye on. We got to see if housing's starting to come back at all. What's the guidance from Whirlpool, right? That's a great tell on how the housing market's actually doing. If they guide pretty decent, that means housing's actually coming back. If they have another poor guidance, that means housing's not coming back. It's just a glimmer of hope out there, okay? SoFi, I'm really rooting for SoFi heavy on Monday. Why am I rooting for SoFi so much on Monday? The reason being is I know there's a lot of retail investors that own SoFi out there, so I want to see people win in regards to SoFi. I'm personally not invested in the stock, but I want to see people win. I want to see people do well. I want to see people make money on that. It's done these things where it'll go over $10 and everybody gets excited, and it drops back down to $7, $6, and then gets everybody excited and drops back down. So I would love to see like a big rally there, and it's a sustained rally, right? Now, when it comes to SoFi, there's a lot of people that are expecting the company to beat expectations on EPS and revenue for not only this quarter they're about to report, but next quarter as well. And, I've looked at the reasons to why people think that. And I got to say, they might actually be justified reasons in terms of why people think SoFi might beat expectations, because I've also seen what the management team has put out there for some commentary. And based upon some of the word choice from the management team, I would say it does sound pretty promising, especially when it comes to EPS. It kind of almost does sound like they could potentially maybe come in with 1, 2, 3 cents of earnings, maybe this current quarter, and maybe something similar next quarter as well. So, we'll see. We'll see what happens there. But based upon management team's words that they've used recently, it does actually sound like maybe they're going to come in with some beats, at least as far as the EPS line. So we'll see. We'll see. But I'm definitely rooting for retail and hoping for the best for anybody that's in SoFi stock there, okay? Tuesday's a massive day for the market. This is what's crazy. This isn't even the biggest day of the week for the market. It's not. This is a huge day Tuesday. Like, you have AMD, Microsoft, Google McDougal, and Starbucks all reporting, just gigantic corporations, including Microsoft, which is it's between Apple and them for the biggest company in the world right now. But, I mean, it's insane. Absolutely insane. UPS is reporting before the bell on Tuesday. Great company to gauge the global economy, and especially the U.S. economy there. But in terms of what's going on here after the bell on Tuesday, okay? So AMD, I know AMD's been rallying so heavy. The reason AMD's been rallying so heavy is I think people are looking at next quarter's numbers, and I believe that a lot of people think those numbers are too low. That's my expectation, because I looked at this, and analysts only have 7.5% revenue growth for next quarter. The AI chips should be hitting next quarter. They should start to hit next quarter. So 7.5% growth, I don't know. That might be a little bit low there, just to be quite frank. And so there is a potential that AMD is going to come through with a big beat here. And I think that is why this stock has been running so heavy going into these earnings. Because, you can sometimes you got to look at this and you're like, why is AMD running so heavy? I mean, the stock's, 170 plus going into these earnings? Like, why is it running like that? It hasn't been like the earnings from the past year have been great. It's because people see things that are about to transpire. And that's just my hunch. Well, this is a very covered, Wall Street stock. Look at this. As far as this current quarter, 39 analysts have numbers out there. 35 analysts for next quarter. That's huge coverage. And so I think Wall Street looks at that and they say, that number's too low. They're going to come in with a big smash and everybody's going to be feeling very FOMO-y in regards to AMD. Now, Google McDougal. Here we go, folks, okay? Listen, not easy numbers for Google to beat. They're expected to report 12% revenue growth for this quarter they're about to report, and then 52% growth in the earnings per share. Now, what I'll come in and say is if Google beats on revenue line item, then it's, I would say, higher than a 90% probability Meta is going to beat on their revenue, okay? So this is, in terms of what really matters to Google, certainly EPS, but I can tell you what matters for companies like Meta and many others is what happens with this revenue line item. If Google comes in with 13, 14, 15% growth year over year, Meta's going to fly that next day. It's going to be off to the races, okay? So there's going to be such good intel on what's kind of going on there. I'm not super confident Google's going to beat. And the reason I'm not super confident is YouTube's been in a tougher place as far as kind of their business model. So we'll see what happens. I don't want to get too excited. Let's just put it that way. I don't want to get too excited about that one. But like I said, if they do come in and beat, Meta's going to be flying, baby. Now, the one thing I'll say about Google, though, is they might be back. The old Google we used to know back in the day might be back. Here's the deal. This company would just miss and miss and miss and miss quarter after quarter after quarter in 2022. As a matter of fact, every single quarter in 2022, they missed earnings per share. That's embarrassing for Google. That should never happen. And 3 of the 4 quarters, they missed on revenue, and they almost missed that one as well. They barely beat by $85 million. That was the disaster of Google. The Google of old, if you never knew the Google of old, folks, man, it was a spectacular stock. It was one of the very few companies that you knew coming in and quarter out. They were going to come through and smash EPS, smash revenue estimates, and you were just always going to feel so comfortable in the stock. But then that stock dissipated, but now it looks like it's back. You look at these past 3 quarters, 10-cent beats every single on the EPS side, every single quarter, last 3 quarters. And look at the revenue side, $981 million beat, $1.85 billion beat, $960 million beat. Google might be back, folks. The Google of old might be back. Now, Microsoft, they always come through with their numbers, almost every single flip and flapjack and quarter. I would say they'll probably slightly beat. Probably. That would be my guess in regards to Mr. Softy. Probably slight beats in regards to Mr. Softy. If you look at their last 3 quarters here, 22-cent beat, 14-cent beat, 34-cent beat, $1.83 billion beat, almost a $700 million beat, and almost a $2 billion beat there for Microsoft. So, yeah, Microsoft probably going to come through with the numbers. I mean, they're about as solid gets in the stock market right now, okay? Now, Starbucks. You want to talk about a stock that might be an opportunity? Might? Keyword is might be Starbucks. Here's the deal, okay? Starbucks used to be another one of those very respected great companies that would always come through with great numbers. And over the past couple years, they've become a very messy company. And you can see this in their earnings report. Missed on revenue, missed on EPS, missed on EPS, missed on EPS, missed on revenue, missed on revenue. That's a messy Starbucks. And this messiness what has transpired? Well, the stock's done. Actually, for Starbucks, this is horrible performance. I mean, that hasn't even come close to keeping up with the S&P 500 over the past 5 years. Starbucks used to be a stock that you were pretty confident was going to outperform the S&P 500. The fact that this stock can't even keep up with the S&P 500 shows you how bad Starbucks has really been executing here recently, okay? And so messy performance gets you that sort of situation. But the one thing I'll say about Starbucks is if they come through and get back on the right track and they come through with those EPS and those revenue beats, people will be ready to pile back in this stock. This is a stock Wall Street loves. Usually, this is a stock they feel very comfortable in. It's not super high risk. So everybody wants to own Starbucks. They're just waiting for Starbucks to get back on the right track. And so if that happens, don't be surprised if next thing you know, you see Starbucks over $100 at this time next week, okay? We'll see. We'll see. I don't feel confident either way about their numbers, about missing or beating. But like I said, if they can get back on the right track, the stock will probably be 100 plus at this time next week, okay? Alrighty, next up here. Wednesday, not too much going on Wednesday. You have a mess in terms of Boeing is going to be reporting. And then you have MasterCard, which is very important to always hear what's going on with MasterCard. That's big play on the economy, right? And then Align Technology, folks, might be an opportunity. Here's the deal. Align's been a great company over the years, phenomenal stock over the past 10, 15 years. They make the invisible kind of braces and things like that. And, you know, here's the deal, okay? The expectations are on the floor for Align. This is usually a double-digit growth company, but here's the deal. This quarter they're about to report only expected to have 3% revenue growth. Next quarter, basically no revenue growth. And the following quarter, 0.6%. So I don't know. I'm trying to figure out what's going on here with Align. Because coming off of Rona, 2020, 2021, a lot of people delayed, you know, fixing their teeth and stuff like that, right? That was kind of Rona time. 2022 and 2023 were a little bit of like that get back. And so maybe 2024 is just a very sleepy year for the business model. But, you know, this is a stock that if they all of a sudden came through with a really good guide, and when I say really good guide, I'm just talking about like 5, 8%, 9% growth. I mean, you know, it's going to 300 plus at that point in time. So we'll see. I don't feel really confident either way around this one, okay? Thursday's everything for me. I mean, it's everything. Amazon, Apple, and Meta all report after the bell on Thursday. I'll likely be doing a Twitch live stream on Thursday. I would say like 99% probability I'll be doing a Twitch live stream on Thursday because I got to live stream that baby. I mean, that's going to be insanity. Are you kidding me? 2 of my top 3 stocks both reporting after the bell on Thursday. It's going to be ridiculous, okay? So how am I feeling about all this? Okay, am I scared as scared can be going in? Here's the deal. Okay, Meta. This position is just flying. It's up to $717,000 position in the public count. Keep in mind that the public count's a little bit over $1.8 million. So the weighting of Meta is getting massive now. And if this baby flies on earnings, and next thing you know, it's going to be $800,000, $900,000 position. The weighting in the portfolio is going to get bigger and bigger. I feel great going into these earnings for Meta. I'm going to feel even better if Google comes in and beats. If Google comes in and beats, like I said, especially in terms of revenue specific, if Google comes in and beats on revenue by any decent margin, I would say there's like a 90% plus probability Meta's going to come in and beat on their revenue as well, okay? So I'm going to already kind of have some intel on what's actually going on with Meta numbers when Google goes ahead and reports, okay? Feeling great going into these earnings, okay? For 3 reasons. Reason number 1, I'm feeling great going into these Meta earnings is the stock's trading at about 22 times 2024 expectations. So stock's incredibly undervalued. This is a double-digit grower, folks, top and bottom line. Top and bottom line double-digit grower at a 22 forward PE, undervalued. For one of the greatest companies in the world, undervalued. So that makes me feel very comfortable. If this stock was trading at a 42 or a 52 forward PE, I might be a little bit more uneasy, right? At 22, put me to sleep. Easy peasy, lemon squeezy, give me the money pleasey, okay? Reason number 2, I'm very comfortable going into these earnings, is I was looking at revenue expectations for next quarter. Analysts are, and there's 33 analysts that cover next quarter's numbers. They're at about 18%. There's a good chance that number could be too low. And the reason that number could be too low is if we think about the first quarter of last year, there was a very weak quarter. We were coming off of the stock market mini crash, we can call it, right, of 2022. A lot of companies did not want to invest in marketing, in ad spend in that first quarter. And like the sentiment from big CEOs was just so negative going into 2023. I mean, obviously all the economists were predicting recession. It was so bad. It was so negative. And let's fast forward to now. It is not like that at all. Like, there's still obviously people cautious and things like that, but I can tell you people are way more willing to spend on ads and run their businesses now at this point in time than they were at this time last year. Bottom line, it's a night and day difference. the confidence slowly built as 2023 went along. The market got better. Company executives realized, man, we got to still execute our businesses. And guess what? If you want to still execute your business, you've got to run ads for your business, okay? Like 90% plus of businesses need to use products like Meta and Instagram for ads, right? So that's reason number 2 for comfort. I think they're probably too low in their numbers there. Reason number 3 for comfort is it looks to me like the old Meta's back, okay? The old Meta was kind of similar to the old Google, where you just knew every quarter they're coming in and smashing it. And here's the deal. Out of the last 5 quarters, they beat revenue 5 times. 300 million, 475 million, 981 million, 976 million, and $678 million beats. The last 3 quarters, they've beat on earnings per share. 25-cent beat, 11-cent beat, 79-cent beat. And the beats have got, obviously got pretty insane last quarter. So I'm looking at a situation, keep in mind, they came in with that 439 last quarter, right? 439. 495's estimate coming off 21% growth. I don't know. I'm just gonna go out there on a limb and say Meta's probably gonna do 525 to 595 of EPS. 525 on the low side, 595 on the high side. My opinion. So once again, we go back to the valuation. This valuation is probably much lower than this. It's probably trading at 18 to 20 times 2024 estimates, which once again for a double-digit top line and bottom line grower is far, far too low. Okay, so yeah, I am feeling extremely, extremely confident in Meta when they come in for earnings. I feel very, very, very comfortable. Okay, now my warning to everybody out there, because I do have to give everybody a warning, and my warning is Meta might have already made the move by their earnings day. Okay, so let's imagine a scenario where Google comes in with a big beat. Well, then everybody's going to kind of run to the conclusion, obviously, that Meta's going to beat. And so Meta might already have made its big move by the time their earnings come out. So the day after Meta reports, the gains might be very small, or it could even actually downtrend the day after. Okay, so that's just something to keep in mind. Now, if Meta comes in with just some shocking number, I mean, maybe we're flying much higher. Okay, maybe we're going to 450, 475. But, don't necessarily expect that, because if Google comes in with that beat, believe me, there's going to be a lot of people that are like, oh, Meta's, going to come in with the beat, and they're already going to have priced it in by the time we get to Meta's actually earnings. The stock might be trading at 420, 425, something like that. So just a little food for thought in regards to that, okay? Before we go further here, if you need help understanding portfolio management, understanding how to get good deals on stocks, valuations, if you're paying overvalued, undervalued valuations for stocks, if you need help understanding financial statements, income statements, balance sheets, cash flows, if you need help understanding advanced strategies such as hedging, anything like that, check out the pinned comment down there. Apply to join my private stock group. That can help you with all those. I have, just phenomenal courses that teach you exactly what you need to know in regards to all those sorts of different subjects. Okay, so if you want access to that, pin comment down there, apply to join us in there. We have over 1,000 members in there with us. Okay, now Amazon. They're reporting this is the number 3 biggest position I have in the public account. It started out as a pretty good stock for us so far. $54,000 we're up so far in regards to Amazon. Now, for Amazon overall, okay, here's a thing. It's the number 3 biggest position for me, but Elf's coming for it, man. Elf is only $4,000 behind now. Amazon in terms of taking over as a top 3 position. So Amazon's got to come through with some numbers here to kind of keep Elf in the background, because Elf, oh my gosh, we know what Elf does. Elf comes in and smashes it. There's a reason that stock's up 2,000% for us, right? So here's the deal, folks, okay? Smash Factory incoming. Smash Factory. Smash Factory is coming for Amazon, okay? If there's one stock, I'm looking at this earnings season, and I'm like, dang, man, probably should play this one for earnings. Some short-term calls. I'm likely not going to do it, but it's very dang tempting. It's Amazon. I think they're going to smash. Not beat. I think they're going to smash. Smash, okay? EPS, far too low. Far too low. I don't think they report anything south of $1. So that EPS is going to I think, going to be a shocking number to a lot of folks out there, okay? Revenue, far too low in my opinion. 11% growth, 11% growth for last quarter. In this quarter they're about to report, far too low. I think AWS business is coming back rapidly, a lot stronger than a lot of people think. The advertising business is going to be booming for Amazon. That's a massive growth lever for the company. And I think the e-commerce business was far, let's just call it, far exceeding anybody else's expectations out there. So Amazon is going to come in and smash. The EPS beat should be shocking. I think it will be one of the most impressive. No, I think it will be the most impressive earnings of any of the big tech companies. Any of the big tech companies. I think it's going to be the one that everybody looks at and they're like, what did Amazon just do? What number did they just put up? Huh? What? It's going to be one of those sorts of earnings periods for Amazon here, okay? Now, here's the deal. I think it's a realistic possibility this stock's at all-time highs by the end of the week. All-time highs. Now, old all-time highs in the 180s, so, it needs to have quite a move. But based upon how much they're going to smash this earnings, in my opinion, I think this baby's going to just fly. We'll see. But that's kind of my thinking in regards to this baby, okay? New all-time highs this week, okay? Now, Apple, here's the deal, okay? Apple could dampen the mood a bit. And we know Apple's in a tougher place with their business model. They're expected to have less than 1% growth for this past quarter, only 1.4% growth for this upcoming quarter. So we know Apple's in a tougher state, so they could dampen the mood a bit. But the one thing I'll say is if somehow a miracle happens and Apple comes in and beats their numbers and maybe has a decent guide for next quarter, if they even do guide, then we could have a blow-off top coming for big tech in February. But I don't want to get too excited because Apple, I'm just, not the most confident there. So they might dampen the mood a bit. So that's something to keep in mind. If you're in the private stock group, by the way, make sure you check in the income statements tab. I grade income statements all the time. I just did FICO, Intel, and IBM. So, a lot of earnings going on, folks, okay? Best of luck this week. And, I'll obviously keep you guys in tune with everything going on. Make sure you join me on Twitch. I will likely do at least one live stream on there this week, if not two. And other than that, if you're looking to reply, join my private group, pin a comment down there. Alrighty, folks. Much love as always. Appreciate you joining me and have a great day.